Hello, this is Tanisha Anyik with Insurance Today with Tanisha and Insurance Today with TLC on blogspot.com. So today I wanted to do a short video about mortgage protection coverage because I believe we need to know about it, but people are not telling you about it, okay? Until now. So before we get started, I want to just go over who I am so you feel a little more comfortable with me explaining mortgage protection and talking to you today. So I'm originally from Montgomery, Alabama, went to high school there, and also went to college there, received a Bachelor's of Science in Mathematics in 2011. From there, I decided to move to South Korea and teach English as a second language. Did that for 2.5 years. Very good experience um, all the way across the world. But then I decided that I wanted to come and get my teaching license. So came to Ohio on a teaching fellowship with the Woodrow Wilson Teaching Foundation. Received my master's in education and mathematics in 2015. From there, I taught for 3 years in the same district, middle school and junior high school students. So I taught 5th, 6th, 7th, and 8th grade. Everything from intervention to basically an Algebra 1 class with a little bit of geometry in it. Then this past May, I decided to become a licensed insurance agent. I was looking for something different outside of the teaching field that would allow me to spend more time with my daughter, who's 2.5 right now, and be able to travel and go see my family in Alabama, my friends in various places across the country, which is possible with teaching, but I wanted more. So becoming an insurance agent did that for me. And now I work with teachers and I help them plan their retirement. So I help them see what else they're going to need to kind of fill in the gap in between what their teacher retirement is going to leave them with and what they want in retirement. So what is mortgage protection coverage? Well, most people would think that mortgage protection coverage protects their mortgage and would therefore keep the house in their family's possession if something were to happen to them, like they passed away. Well, that's not the case with the mortgage protection that you pay for every month as a portion of your mortgage payment. That's right. You're paying for this protection and it doesn't benefit you. That protection protects the bank or the lender. It guarantees that they get their money back. If something happens to you and you can't pay for everything, they're going to get their money. However, your family is going to lose the house and you will still owe that money. Your family will still owe that money if something happens to you. So let's look at an example. You buy a house for $250,000. Your mortgage payment is going to be just under $1,350. And that'll be for a 30-year mortgage with a 5% annual interest rate. Now, let's look at your ledger and the bank's, okay? So we're going to do like a side-by-side comparison here. So you have $250,000 that you borrowed from the bank. So you owe this amount. After 10 years, you've actually paid $162,000. But most of your mortgage payment is actually going to interest. So only about $300 or so goes a little over, in between 3 and 4, goes to your principal. The rest is going to the interest, okay? So after 10 years, like I said, you've actually paid to the bank $162,000, but you still owe $203,350. Now, let's say after you made that last payment, you pass away. You still have this debt, and now it's on to your family. And they're going to lose that house if they can't pay that mortgage payment, if they can't keep that up. Now, let's look at the bank. So they loaned you this money. So they're technically in the red as well for that $250,000. After 10 years, like I said, you've paid them $162,000. So technically, they're only in the red for $88,000. If we're to talk about getting them back to whole $250,000, but as we see from what you've actually paid down here on your principal after 10 years, they're going to make well over $250,000. Okay, in the long run. But you pass away, they're now at zero because of that mortgage protection that's written into your mortgage payment. It ensures that they get their money, that at least they're made whole, okay? So that they haven't lost any money here, all right? Now, this doesn't benefit you and your family, though, at all. You owe still over $200,000, okay? The bank is good. The bank's going to take that house, and then they're going to resell it, but you still have that debt, okay? So let's look at something that will benefit your family. Same scenario, $250,000 loan. After 10 years, you owe $203,350 still. You pass away. Oh, now zero. No debt. This would mean that the house is now in your family's possession. It is now building wealth for your family. It can stay in your family. They can sell the house. They can make a profit on it. Well, how did this happen? Well, after you got that loan for $250,000, you took out a mortgage protection policy for yourself. Maybe it's $25 a month. Maybe it's $50. Okay, but let's go with 25. 25 is not a lot of money when it means that no matter what, if something happens to you, your family will be able to keep that house. Okay, so what would happen when you pass away? The company would write your family a check, your beneficiary a check for $250,000. They could take that money, send it straight to the bank. Now, if we talk about the bank, remember, they're always going to get their money. And in this scenario, they're going to get over 250, but that was the plan, right? That was always the plan for the bank, that they were always going to get more than just to the 250 back, right? Because here, they're really only in the negative for $88,000. But your family is about to cut them a check for $203,350. So either way, the bank kind of wins on this one if you look at the numbers. But your family in the long run will win if you are able to keep the house in your family's possession. Real estate builds wealth. If you look at wealthy people, guaranteed there's real estate in their past. Look at people that aren't that wealthy. There might not be any real estate. Okay. Real estate helps you build wealth. So this little thing, that $25 a month, could help you start to build wealth for your family. And that's why I think this is so important and why I wanted to do this video. Okay, to really just show you the numbers and help you understand what's really going on. So that's all I got for you. Connect with me on Facebook. Search Insurance Today with Tanisha, or on blogspot.com. It's Insurance Today with TLC.blogspot.com. I look forward to sharing more videos with you, more about what I'm learning on this journey. Reach out to me if you have any questions. If you're in Ohio, want to connect, feel free. Talk to you soon. Bye-bye.